So we were talking about when to file the income tax return. We have learned about trust and estates, standard corporations, and individuals. That is 14th month following the end of the tax year. And in case of small corporation or association of persons or partnership, the due date is 15th day of the third month following the end of tax year. If our tax year is ending on December 2019, the due date for filing the income tax return would be 15th day of the third month of 2020, which is 15th March 2020. And we can get extension after filing a form to request, and extension period is generally 6 months. There are exceptions, and this is extension of time to file, not time to pay. So here is an example. Corporation XYZ Incorporation has tax year that ends on August 31st. When will its tax return be due? So because it is a corporation, the due date should be 15th day of fourth month following the end of tax year. We don't have tax year, but we have ending dates for that tax year, that is 31st August. And after 3.5 months, and after 4.5 months, which is September, October, November, and December, that is 15th day of third month following the end of tax year. Assuming the corporation filed an extension, when would the tax return be due? An extension is granted for 6 months, as we have learned about that extension period generally consists of 6 months. So after that day, after this date, we would calculate or add up 6 months. That is January, February, March, April, May, and June. That is 6 month extension that would be granted to XYZ Incorporation. Statute of limitations, time period during which taxpayer can file an amended return. And obviously amended return would be filed if there are some misunderstatement of your taxable income or your total tax in the tax return. Internal Revenue System can assess a tax deficiency. Statute of limitation generally lasts 3 years, but sometime it is 6 years, and sometime the SOL that is statute of limitation, is open indefinitely. Obviously, it depends upon the nature of business, the the person who is filing the income tax return, like what kind of business the company is running, and there are some other factor upon which this time period depends. Statute of limitation starts to run on the later of date the return was filed or original due date of the return. If tax year was 2020, December 2020, the due date of return would be 15th day of the fourth month, that is 15th March. But if the person has obtained the extension in filing the income tax return, then after fourth month, 6 month after fourth month, the SOL period, that could be 3 year or 6 year, would start. Here are some examples. Bob and John file an extension for their 2018 tax return. When the extended due date, when is the extended due date? If they have filed an extension, what is their original due date? Not for extension, what is their original due date? So as we have learned that about it, for individuals, at Bob and John's are individual, they have to file 15th day of fourth month following the end of tax year. And if their year is ending on 2018, so 15th day of fourth month would be April 15th. And 6 months after April 15th, that is October 15th, 2019. This is the time period for extended due date. They file their return on August 25th. When does the statute of limitations end? So if we see the sequence, first of all, we have to file the income tax return, and if we get an extension, we can get additional 6 months to submit our return. And during statute of limitations, we have time period of normally 3 or 6 years. For the age of understanding, we will take this period, that is 3 years. They file their return on August 25th. When does the statute of limitations end? August 25th, 2022. That is the time when statute of limitations end. 3 years after the letter of actual filing date and the original due date. As they have filed their income tax return on 25th, not on the original due date, that was 15th April 2019, and 3 years after 25th August 2019, we can get our extension due date, which is August 25. And what if they filed on March 19th? Not extended period. This was the date when the filing of income tax return was due. Not on this date. They filed on this date, April 15th, 2022. That is their statute of limitation. At this date, their SOL ends. 3 years, which is 3 years after the letter of actual filing date or the original due date. If someone has filed on actual date, then we would take 3 years after date of actual filing. That is in case of extension granted. Like if someone obtained the extension, then we would see actual filing date. And if they did not obtain extension for filing their income tax return, we would take this date, that is original due date. So here is audit selection. In general, if you are selected for audit, the IRS Internal Revenue System likely has a reason to believe that there is an understatement of your taxable income or your taxes. In case of audit, the IRS normally look upon your income tax return and measure if you have any misunderstatement of taxes. There are three types of system that works: disenforcement, DIF system, document perfection program, information matching program. There are types of audit. The first one is correspondence examinations. That is most common audit conducted by mail and are generally limited to one or two items on the return. Like if you have 4 or 5 types of income, this is conducted by mail and generally limited to one or two items, which could be income from property or income from capital gain. Office examinations, that is second most common type of audit, conducted in local internal revenue service office and tends to be broader in scope. Filed examinations. Least common audit held at the taxpayer's place of business and can last months to years. And this is type of examinations we normally see in movies and TV seasons. So here is IRS processes. These are the three consequences one can face in case of IRS examinations. Either he pays the taxes due or he files suit in US District Court or US Court of Federal Claims, or if he does not pay tax, the petition has filed in tax court. There are the three consequences. Either he agrees and pay the dues, or he or she sues the IRS department, or the IRS department file the case against him or her in tax court. So we are going to study it in detail. First of all, IRS examination would occur, and if he agree with the proposed adjustment, the person would pay tax that are due. And if the person disagree with proposed adjustment, a 30-day letter is given to him. If no taxpayer response, a 90-day letter is given to him. If he do not pay tax, petition is filed in tax court. So, what if after 30-day letter he appeals conference, he requests appeals, in appeal conference agrees with proposed adjustment and pay tax dues. This is scenario 2, scenario number 2. In first scenario, he agree with proposed adjustment and pays his taxes dues. After appeal conference, he disagree with proposed adjustment. A 90-day letter is given to him. He pays the tax and file claim for refund with IRS. And Internal Revenue System denies refund claims. The person can file suit in US District Court or US Court of Federal Claims. The thing here is, even he disagree with proposed adjustment, the person has to pay tax, and after paying tax, he can file claim for refund with IRS. And if IRS denies claim refund, he can file suit in US District Court. So the point to notice in this scenario is he has to pay tax before filing claim for refund with IRS. And if he does not pay tax, After 90 days later, the IRS would file a case against him in tax court. So there are some examples of IRS processes, and IRS in news. So this is basically about politics, and this is not in our normal practice to comment on politics of another country. I hope you have understood all the topics, and if you find any difficulty, you can ask me anytime. Thank you very much and have a good time.